What up, what up? Thank you for listening to Compas Unfiltered. I'm your host, Checo.
And this is your co-host, Noel. What up?
Yes, sir. If you guys haven't, obviously subscribe to the YouTube, man. Follow us on all of our social media. We got Instagram, Facebook, Twitter. All the links will be below. And as you guys have seen, you guys already see the title, what we're going to be talking about today. Stocks. It's tax season, so we'll be covering some taxes and a little bit of finance. Especially with, like I said, with us Latinos, you know what I mean? We don't really get involved with stocks, bro, for whatever reason. I don't know. For me, yeah, lack of knowledge. My parents never got into it, you know what I mean? I don't know about yourself, bro, but we just don't, I don't know, we just don't do it. We just don't touch it. Pero hopefully aquí en los compas nos van a ayudar to explain some stuff, man, some questions, and just to kind of help us get into it. You know, people who are watching this, you know what I mean, this first time, because there's so much stuff out there. Before the podcast, we were talking about it. I was already like, oh shit, bro, like damn, you know what I mean?
I had too many questions, bro.
You did have a lot of good questions, you know what I mean? But it's a lot of information. El compa Cesar, compa Noel, Hermosillo, Bonilla, right?
Cesar Bonilla, yep.
Thank you guys for coming to Compas Unfiltered, bro. Yeah. We're gonna get right into stocks, bro, because that's what was going on, especially the last 2 weeks or 3 weeks with the whole thing with GameStop, and that's when I think when everybody kind of, I saw memes, I saw, you know, just stuff on Facebook or whatever, at least myself, you know. So for people who are trying to get into it, it's their first time, you know what I mean? They probably have a couple bucks saved up to the side. They want to get it. They want to get into it. How do they get into it? I mean, like, as far as, like, do they go through the apps like Robinhood, Webull, or do they go through a broker? Like, how do you get started?
Yep. So I'll take this first one. So I'll talk about kind of, you know, my experience. I'm barely getting into stocks. So my wife and I, we've opened an account through Fidelity, and we started to, you know, play around with some of the stocks, buy you know, a stock of like DraftKings, for example. We got some Peloton, and these are usually, you know, about $50 or so, or Peloton, I think, was like $60 or something. So it's not a lot of money, but we're trying to get our feet wet and just trying to get a good understanding on the platform, Fidelity. Shout out to my buddy Jesse. He's been guiding me along the way. He's been doing it for a while and just showing me some of the basics that you know, he's picked up along the way. So that's my personal experience, my perspective. I think the biggest message I have for people is, you know, a lot of people think you need thousands of dollars to start playing the game. Not necessarily. I think, you know, you could start playing, you know, buying a few stocks here and there with, you know, $20, $30, you know, whatever you can. So
see where it takes you.
I think, you know, that's a good starting point to get a better understanding of you know, how things work, and you know, go from there. So
the ones that you mentioned, you know, Peloton and those, did you purchase those more of a long term, or like that was your plan right now, getting your feet wet? Hey, let's purchase a bit of that, let it sit and see if it's going to keep going up to reach, you know, what Apple's at or whatever. That's kind of like your game plan for those specific ones?
So the game plan for those is, you know, get some stock, try to understand, you know, some of the gains, some of the losses, some of the things that you know, affect a stock price, and then from there, you know, just have a healthy conversation with those around you. Like, hey, you know, should I start selling this? Should I start buying this? And at this point, for me, it's not big money. You know, it's like $50, $100, but hopefully at one point, once I have a little bit more experience, I could start putting a little bit more money and some, you know, a little bit more serious money.
But how do you get started? Like, as far as like, where do you go to purchase? You know, I mean, for people who are watching or trying to get into it, like, what did you go through an app? You're going through a broker? You're going, or you said?
Yeah. So we just opened a Fidelity account. It's like opening like a bank account. I mean, oftentimes they ask you for personal info, social security numbers, things like that, and then pretty much link it to your bank account and transfer money over. If you want to transfer over $20, $1,000, whatever, and then from there, start buying some of the stock. So
you just search whatever you know, stock you want to buy, Peloton. Now here's a question that arises here which has affected me when I searched Tesla. You know, Tesla was being brought up a lot. You know, and I heard it's very risky. It could be up, it could be down real quick, right, within the days. You know, but when I did search Tesla, a bunch of Teslas came up. You know, how do you know which one to go with? Like, are you searching for a specific one?
Well, normally you can just visit the company website and kind of see what their ticker symbol is.
Okay.
And then you just go through whatever app or whatever account. You know, if you're going through Fidelity, you can type it in. You know, the letters is
specific.
Yeah.
Code.
And then,
What I
and then
usually
you
do,
buy it.
I just do a Google search, Tesla stock symbol, and then it pops up.
Oh,
then I'm like, okay, cool. And then I go.
Some of them like
Maybe tricky?
Yeah, because the name, you'll think that you're buying this stock, and it's actually something different. You know, which one was it recently that Elon Musk mentioned something on one of his Signal. Okay, so Elon Musk mentioned Signal, and everybody thought it was a stock, and everybody started buying it. And he was talking about an app. You know, it was a text messaging app.
Okay.
So you know,
and the stock for that increased. The stock
it was
price,
like
right?
exponential growth. Like it was. There was no reason it should have increased, no fundamentals, just none of that. But it went up. So
and
it's really good. You have to know what you're investing in.
And that brings up a good point. Like, there's so many outside factors that affect the stock price. The economy, the president talking about it or mentioning something about an industry. Elon Musk, talking about this company or whatever.
As soon as when the elections was happening, and as soon as things start swaying in one direction, and they kind of know where a president will stand at. Like, for example, he's all about green energy and doesn't like oil, right? So he shut down this pipeline, and all these EV stocks, the electric vehicle stocks, the battery stocks, all that. They make the batteries for, they have an advantage because now you have a president that is EV friendly. You know what I mean? Green friendly.
Right.
So you kind of have to look at all that.
So you definitely got to like keep up with the news, keep up with just so you know where to put your money and where to invest, right?
Yeah.
So is that what you guys do, or you say you talk to friends, you do talk to other associates?
Yeah. So now that I'm turning my attention more into like the stock market and trying to understand it better. Definitely. Reading the news, trying to find that next Netflix, that next big company that's going to blow up in 5-10 years, and
put money in there.
Put some money in there, like while it's at a lower price right now.
There's quite different ways of finding stocks. I mean, you can go after the news. You can look at company fundamentals, and or you can just go after some of the stocks that the Facebook groups mention or Reddit and stuff like that. Now that's a different type of trading. It's a lot riskier, and but yeah, people do it. People do it. I was in the last few weeks. I was listening to this podcast. You have two types of traders. You have your fundamentals that look at company fundamentals, like this company's doing good. It should continue to do good. And then you have your technical analysis people that, hey, I'm good at reading charts. I'm good at looking at indicators, and I make my decision based on the indicators that I put in a chart. And then this guy was saying that there's the meme investors. I'm like, I've never heard of that. What is that? He's like, well, it's the Facebook groups that put down a ticker symbol, then they put down rocket symbols, emoticons, and to the moon. And there's websites that will rate how much of a social, how much the stock, the ticker is being talked about in social media. And sometimes it takes off. So some of these people will
get lucky.
Like GameStop, right? That's a perfect example. You start seeing it on your feed and you're like, what? Why is everybody talking about GameStop? AMC, all these other companies. And, you have no idea, right? You're not looking at fundamentals. You're not looking at chart analysis. You just know that everybody in your feed has GameStop, right? So you throw some money at it. And it's, like I said, it's risky. So you throw some money at it. You really don't know how to invest. And then a week later, it's down 40%.
Yeah.
So there's...
Hey, how quick was it? Did it already go back down?
Oh, yeah.
How quick was that? Within a week or within days?
The whole process kind of blew up towards like the last week. But it was a few months where Reddit had really influenced the price of the stock. And it was being pumped, right? It was being... That's crazy. A lot of people just buying it. You just create like an artificial, just a pump. I don't know if you call it a pump and dump, right? Some people say that was a pump and dump, but that happens a lot.
To give you an idea, I started, I believe, at $18 or so, and the highest it got to is like $380 or so.
Jeez.
So
When'd you
for
cash
people, no, I didn't jump
No.
into it. I'm like, nah, it's too crazy for me. It'll probably blow up in my face if I put some serious money into it. But
I didn't touch it, and I'm all about that short term, that swing trading, momentum trading, and been doing it for long enough that you just don't know. The pre-market opens up very early, and you wake up at 5 or 6 and it dropped 20%, and you were sleeping. So it's very, very risky if you don't understand what you're getting. And people look at that. People look at the stock and say, well, it's up 100%. How much more can you go up? Nobody knows. Nobody knows.
Right.
So
yeah. But going back to your original question, I think it's pretty easy to start buying some stock, opening an account, connecting it to your bank account, things like that. So I encourage people who are interested. You can start playing around with it, and just
A couple $100.
Yeah. Yeah.
Is that how you're also buying as well? You opened an account, or how are you?
I have a few accounts. I have Robinhood, I have E-Trade, I have Fidelity, Vanguard. Some of them have been through employers that had either a 401k and there's left over that I had money in there. But any of the ones. You even mentioned something like Webull, Tasty Trade, Robinhood. Robinhood, there's a certain sentiment towards Robinhood right now because when the whole GameStop AMC thing was going on, they prevented you from buying more. And that kind of prevents the stock of the price to go up. So they're like, this is supposed to be a free market. Like, people are supposed to be able to get in and out. And then you have a really popular broker, Robinhood, who tells you can't buy it anymore. And then the stock just drops.
But they stopped because the rich were losing a lot of money, and that's where it comes, right?
Okay,
that's where the issue comes. Like the little people.
So they're in with the other people, the 1%ers.
There's a few theories of what happened. Robinhood was owned by the company that was losing money. The hedge fund. So they were incentivized to stop the purchasing so it can drop, so the hedge funds can stop losing money. But at the same time, you gotta have to look at it like. This social media was causing this stock to artificially inflate. And people say, okay, well, a hedge fund was doing it to make money. But what if I told you that your 401k suffered? Your 401k dropped because they were holding that stock and they were hedging against it, right? Or who knows what they're doing. But Reddit grabbed a hold of it, pumped it, and your 401k or your pension or something dropped, so there's a few different ways of kind of looking at it.
I mean the only way you probably should look at it is a free market. If everybody else is playing free market, there should be no reason why you would stop or prevent anybody from buying it. Because in this particular case, Reddit was the one that was pumping that information, but I'm sure there's other ways that other people pump information and inflate other stocks as well for their gain. You know what I mean?
Yep.
And nobody's stopping that, right? So I feel like, if it's going to be fair game, free market, it should be free market. If you're brave enough or stupid enough to invest in GameStop or whatever at that particular time, because I'm sure a lot of people made money, and I'm sure at the end, a lot of people lost money. That's why I said brave or stupid, whatever you want to call it, but that's
Bag
your
holders.
call. Right.
Bag holders.
That's your call. You know what I mean?
That's the risk you're taking.
Right,
Yeah.
exactly.
People
But
buy
at
it.
least you're able to take that risk. They're not taking that away from you.
Right.
Yeah.
They're not
That's
changing.
my thought.
They're not changing the rules along the game.
Exactly. That's my thought behind it, but I don't know. Checo, what you got, brother?
If you wanted to move on from that,
Yeah,
'cause,
let's go.
basically, you're going to some of these apps, Robinhood or whatever. That's how you guys are recommending people go buy through. Except maybe Robinhood, right? Maybe I don't know.
People. It's got like a 1-star rating on the App Store. There's a reason behind that, and but it's
stay away from
so easy to use. So easy to use. But you got other ones. Fidelity's a good one.
Yeah, I like Fidelity. I also have Vanguard.
Charles Schwab. There's just so many of them, right?
Yeah.
But then you have the rise of these apps where millennials kind of took hold. And that's what happened to Robinhood. It's just so easy to invest that all these uneducated investors are grabbing a hold of these stocks that don't really have a reason to go up, And, but yeah, Robinhood, Tasty Trade, Webbill.
Before we move away from the apps, what's up with Acorn? I get the
Yeah.
commercial all the time. You know, when you're watching YouTube, when you're watching anything, it pops up Acorn. You know, I forgot the actor. I forgot the actor. But they say, oh, you know, whatever you buy with your debit card, whatever's left over.
I think it rounds it to
it rounds it up to a certain dollar, to a dollar amount,
dollar.
and then it invests that change.
You're saving without you feeling such a huge hit. You know,
You guys aren't part of it though. No, you guys haven't gotten into it.
No, I willfully put my money into gambling.
Okay.
Well, you know, I do
want-
swing trading, so that's why
That's cool. I mean, the only reason why I brought it up is because it pops up on me all the time,
Yeah.
and it sounds intriguing because before debit, you know, when I would use cash, all that change in my pocket would go into a place where it would get saved up, and then eventually I had $500, 350, you know, and I was like, oh damn, just from change, cool. You know, I mean, I spent it probably on drinking,
if
but
you can use that,
you know what I mean?
Yeah.
People are probably watching, thinking, okay, well, how do I save money, right? So you can use that and kind of then start redirecting some of your money into some of the
The other apps to invest
some of the
in
other
stock,
stocks,
right?
So you can, you know, if for long term and just or whatever the money is needed for.
For sure.
Yeah, are there any like safe stocks? So where like if someone who's trying to just starting out, you know, whatever, maybe they can, and they don't have so much money, you know what I mean, to invest thousands or whatever. You say you don't have to, you know, it's like $50 here, $100 here, or whatever. Yeah. Is there any like stocks where you could recommend people like, you know, this is kind of like a safe bet? It's long term, you know, but it's kind of
Go ahead.
Well, you can kind of look at what stock you're going to invest in. For example, you know, you can invest in, you know, blue chip stocks, right? Stocks that for companies that are very, very stable, you know, your Coca-Colas, your Johnson & Johnson, your GEs, you know, all those stocks. And then they're less risky than, say, going after GameStop or AMC or some of the, you know, the airline industry right now is a little bit in shambles. And, you know, it's less risky, but, you know, I guess the answer to that, nobody really knows. Because although I may say, hey, Coca-Cola is a safe bet, and they always pay a dividend and this and that, if the market crashes, it's going to take everything with it, you know? And if it goes down 10 or, you know, last year when the pandemic hit, everything went down. Even big, it took the cryptos with it, you know? So there's really no answer to that. You just have to, but it's important that doesn't prevent you from investing. Okay. You know, you can't always think that the sky is falling. You have to, you know, just get in there. You know, if you're trying to avoid risk, go after companies that are stable. You know, if you're okay with possibly losing the money or you know, making a lot money, you can go after some of, you know, newer companies or IPOs or, you know, anything like that. So just different strategies.
And they always say, look around at what you're using, you know, like Apple, you know, everybody has an Apple iPhone, you know, companies General Motors, companies that have been around for a long time, like AT&T, you know, Comcast or whatever, you know, things that have been around for a long time, or things that you use all the time too, you know, like I said, the iPhone is being one of them. This guy's Android, but I mean, shit's blowing up in people's hands. I don't know if you should invest.
You know, Warren Buffett, he goes, hey, invest in companies that are household names.
Right.
So, you know, Johnson & Johnson, you know, your Coca-Colas, you know, all those companies that your Nike. McDonald's, like, companies that you know, that people know, that you know is going to be around for a while. Now, it doesn't prevent, you know, the stock from going down, but, you know, the odds are in your favor, and that's what we want.
To add on, you know, to that, I think stocks are part of the picture. There's also mutual funds, where, you know, mutual fund is pretty much a bucket full of, you know, 100, 150 stocks, where these stocks are from different companies, from different industries. So if one industry goes down, the other one might go up, and that kind of diversifies your risk. So don't just think about stocks. There's also, you know, other vehicles, mutual funds being one of them.
Diversifying, I think, is if you're risk averse, you know, go after mutual funds or ETFs that are diversified. Yeah. That way, you know, the thing is, if you invest in one stock and it, you know, something happens with that stock, like for example, Twitter, after the whole thing with President Trump, the stock in Facebook stock dropped significantly. I forgot what percent it was. I don't know if it was 15 or 20%. But if you were 80% invested in just Twitter, your portfolio would have taken a major hit.
Right.
You know, so you can go after, like you said, some mutual funds that, they follow a certain industry or something like that just to help alleviate or get the exposure that you're looking for.
Right. Now, since you mentioned the ETFs, I was going to ask about ETFs. Like, how do you guys feel about investing in ETFs? Is that the way to go? Is that like a safer way to invest money as well, instead of just a stock on a particular company?
Like I said, these ETFs, these mutual funds, they all either try to get you the exposure that you want. Like, for example, let's say I want to be exposed to the airline industry because I work for an airline company. I can invest in, mutual funds, ETFs that follow companies that follow like just airlines.
Yeah.
And it would help get you that exposure without you having to look up every single company. And the hope is that the person who's managing that fund is smart and knows what they're doing.
Well, typically those ETFs have the higher ranked companies, right? Whatever's making money, right?
Oh yeah,
they're gonna have top, right? They're not gonna invest, so
that's buying GameStop.
So it's already kind of safe.
Yeah, safer. It's considered safer, right?
Yeah.
So.
Cool.
I also wanted to bring up, because you guys talked about Elon Musk. It seems like anything he touches, man, is fucking gold, right? Anything, bro. He mentions something on Twitter, and it's like you said, everybody goes and buys it or whatever.
So recently the big news was that his company invested 1.5 billion in Bitcoin.
Bitcoin, yeah.
So I've been following him because I have a lot of groups. I'm sorry, I don't follow him directly, but a lot of this stuff spills over into the Facebook groups, the Facebook stock groups that I follow. And recently I've noticed a lot of chatter on Bitcoin and Dogecoin. And it's like gone up. So I noticed that he started mentioning it, and I felt like he started mentioning it after he bought it. And I think I read an article that said that since the company has bought it, Bitcoin has gone up 30%. Right now,
it's like at 50K or something.
It was like up there. every other day. Like Bitcoin's at another all-time. It's at an all-time high today, or it was at least. I think it was like, did it reach 52?
At some point, it was at 50 this week. I didn't check today, but it's definitely up there. And to give you kind of an idea to compare, we bought some Bitcoin like $500 or so, and we bought it at like 19,000. This was like 2 months ago. So makes me want. We should have invested more.
Wait, how much was the share? Each share?
One Bitcoin was about $19,000.
Crypto is a different game. Yeah. There's no fundamentals. Crap. It's currency. It's technically currency. And
it's like digital gold, they say, right?
Yeah. I mean, but people treat it as an investment. Mm-hmm. Like who would say, hey, I bought $500 in dollars. Or I'm sorry, I have $500 in $500.
Cash?
Yeah. And it's a currency. And you would probably think that's not an investment. That's money. Well, crypto is money. You can buy stuff with it, but it's so volatile that it just keeps going up, right? So people treat it as an investment as well, but it's risky. It's not like you can pull up fundamentals on a company, right? And it can be so volatile. Like Elon can say, we're dumping all our crypto, and I'm pretty sure we're dumping all our Bitcoin, and I'm pretty sure it's going to cause Bitcoin to go down.
Oh, for sure.
One person with that much influence, that much following, can cause something like that to move in such a drastic way.
Yeah. To me, that just makes me feel like that's going to be here for a long, long time, And I feel like that's the direction we're probably heading towards, because think about it, man. How often do you touch real money, It's rare that I have money in my pocket,
Yep, same.
I mean, that's kind of how it's been since growing up, but I'm saying this is a different type of way. But yeah, I mean, I forgot what the percentage is that's out in the world, physical money. I mean, there's not. And you think about your money in the account, bro, direct deposit. I mean, you never really see money
from one bank to another bank.
Yeah. I mean, whatever money you do have in the bank, they're investing it for you. You know what I mean? You're not making any money on it. You know what I mean?
The way we pay our bills,
right?
It's not
everything.
Like we write a check anymore, things like that.
So I feel like, to me, that's what it means. That Bitcoin's probably gonna be here. For a long time.
There's people that say that it's gonna go up to 300K, 400K.
So right now we should be investing. We should be investing.
JP Morgan, they released that they think that Bitcoin will reach 100K at some point. I read the article. I forgot by when, but it's at 52 right now.
Did you invest or no?
I've been in and out of it. I have some I've been holding for long term because I believe it's gonna keep going up, and I want to hold it, right? I want to be part of that. So yeah, I have it. A few other cryptos as well. You know, some of the other ones it's more like swing trading, just in and out, trying to buy the lows and sell at the highs and stuff like that. But if you're trying to get into Bitcoin, you know, at least I feel that it's gonna keep going up. So you can invest as much as you want, as little as you want. You know.
You're not selling it anytime soon.
No.
Not until it reaches 100K.
I'm happy with the gain so far. Thinking about putting a little bit more in, maybe. So we'll see.
That's what's up, bro. That's what's up.
Yeah.
You know, didn't I hear something about the tax form now? One of the questions is something about crypto.
Yeah. So on the tax return, on the 1040, there's a question out there saying, "Hey, do you own some virtual currency? Either yes or no." So they're trying to track people. They're trying to make sure that they're getting their share of the cut in regards to your gains from Bitcoin and all these virtual currencies. So, you know, up to people if they want to answer that question honestly or not. But
well, when you're investing through some of the apps like Robinhood, you don't technically own it. You don't own the Bitcoin technically. They own it on your behalf, and it's in their wallet. But you have some other ways to kind of try to hide it. But the government came out and said, like, hey,
it's not a good idea.
It's not a good idea. If we find out, you know, I think a few years ago they said, like, hey, we're gonna give you an opportunity to come clean with no penalty. Just come clean. You know, otherwise, you know, there's a fee or fine.
I think the IRS started sending out letters to people that they knew people had, you know, virtual currency.
They must have saved the stamp with me. They didn't see me shit, bro. They're like, he barely has money in his account. This motherfucker ain't got no virtual.
They skipped,
no
Bitcoin.
Skipped
you.
Hell yeah, they looked at my shit like, nah.
Yeah, let's skip Noel.
Let's skip them. Yeah,
That's funny, man.
So a little bit, wait, not that funny.
So hit yes if you got it, or no recommendations, or it's up to you.
Yeah, it's up to you. It depends, and you know, from my opinion, how much
is that fee?
How much is out there, and
I think it's a percent.
It's a percentage.
Yeah, usually when they find that
they find you like that.
But it's not just with crypto though. For the longest, they're some of your like overseas, you know, money. They kind of ask you, or I think that was my understanding. They kind of try to track it.
Yeah, they ask you if you own more than $10,000 in foreign bank accounts, and if you do, then you have a certain filing requirement, not necessarily with the IRS, but with the Department of Treasury.
They kind of want to know.
Yeah, they want to track where money's going and things like that. But
I mean, that was trying to get their cut.
That was the whole purpose of having it somewhere else, bro. So they don't know and they don't track it and they can't get a piece of it, you know?
Yep.
But might as well put it in Chase, bro. Fuck it.
No. No.
At 0.01 interest.
Yeah. That's
Oh, snap.
One of my last questions, or I guess comments, for as far as stocks, because we did talk, the market could possibly crash. Do you guys see that in the future? I mean, obviously you never know, right? But
Yeah.
Warren Buffett, I follow him. He shows up on my feed a lot. I don't know why, but he said that there's something coming, you know. But he's been saying that for a little bit now, you know. But like I said, if you always think that the sky's falling and you're not going to invest because of that, then you're going to keep missing out, you know. So it may happen. Nobody really has an answer to that, you know. So don't put all your money, you know, that people think investing and they think stock market, right? But you can invest in other things. You can buy real gold, you know, real precious metals, gold, silver, you know, all of that, or buy real estate. That's an investment, and it's not going to be influenced by a stock market crash. But you know, there's a certain advantages of investing in the stock market. Like, it's just like paper. You know, it's you don't have to do anything. You know, buying real estate, it's very involved, right? So there's you know, different advantages, but.
Yeah, I think in my opinion, when investing in the stock market, you gotta have, you know, long-term vision. So, you know, I think we're all in our 30s. If we continue to invest over the next 40, 50 years, hopefully, you know, we should see, you know, good gains coming our way, and we should expect, you know, different economic downturns sometime during our lifetimes again, whether it's next year, 20, 50 years. and the stock market has always rebounded after those. So going back to your question, I think yes, there's going to be economic downturns down the road, but at the end of the day, if you have your long-term vision, you should be good to go.
And they say the longer you keep it in there, bro, like you'll be able to bounce back. Like for us that we're in our 30s, we have a 401k account. Yeah, we see the stock going down crazy, the pandemic, this and that. Like there's enough time for you to come back and still be right on track where you would have been or right short of it or whatever, Yeah. But I don't know how many times it can bounce back if we keep seeing these downfalls, bro. You know what I mean?
Yeah.
But
as you get a little bit older and if you have a financial planner or financial advisor, as you get older, they'll tell you to shy a little bit away from stocks as you get closer to retirement,
right?
To kind of avoid some of that stuff. Like, what if you're 3 years away, and you're 90% invested in stocks? Like, you're really putting yourself out there, right? Because you're gonna need that money very soon. So, as you get older, or if you're younger, then you can afford to wait it out. Buy it. It's not a loss until you sell it.
Right. So. But like you said, though, if the market crashes and takes a hard hit, bro, everything's going down. No matter what, where you have your money invested, it's going to...
Yeah.
But, I mean, like I said, let's not discourage people, right? Invest. But, did you want to move on to a different...
Last one. I don't think we covered it. Once you do sell, you have to pay taxes, correct?
Yep.
And what would that be? Just for our listeners or whatever.
Sure. So I think in regards to selling your stock, if you hold it for less than a year, it's an ordinary gain. You get taxed at your ordinary tax rate, depending which.
Oh, where you're at. Okay.
If you hold it for more than a year, long-term capital gain, depending on how much you make, you might get taxed at 20%, 15%, or 0%. 20% is really, it's more for the people that are making over $400,000 or so, 441K. So the true ballers. And then for most people, I'd say it's 15%. Those who are making, I believe, between $40,000 to $400,000 or so. And then there's those that don't get taxed at all.
That's me, fool. What up, brokenness? That's what's up.
Yeah, so in regards to tax gains, yes, for the most part, you do have to pay a certain percentage. It just depends on your situation and how long you held that for.
Keep it for a year and a day. You'd be good.
Yeah.
Right?
Yeah.
Cool. What you want to jump to next, brother? You want to jump into stimmy? You want to jump into tax?
Yeah, we'll go into stimulus and then we'll go into to taxes.
For sure.
Stacks. What am I talking about, bro?
Stacks, dude. Hey, you're dreaming about it.
I want some stacks, bro. You know what I mean?
Yep. They're coming, bro. Compas Unfiltered. We up.
No, we're not.
Come on, bro. It's the vision, bro. Long-term vision. You heard the guy?
Yeah. Long-term vision, dude.
Long-term vision, yo.
Mailbox money.
As far as stimulus, bro, we might get a third one, right?
Yeah,
but for
next month, maybe. Yeah.
Maybe. Congress,
What are we looking at? Hold up 1 second. Don't jump too quick. What are we looking at? Just the rest of what was supposed to be the $3,000 or whatever it was?
Well, the $2,000. So it'll be $1,400. As far as like direct payments, I think they're gonna push out more. Well, I don't know if they're gonna push out more PPP or as the EIDL or anything like that. I don't know.
Yeah. So I brought some notes here that from what I'm hearing, from what I'm reading. So in regards to the third stimulus check, they're, I think, voting on it in the coming weeks. Hopefully sending that out sometime in March. They're talking about $1,400 per person, including kids. So if there's a couple plus they have one kid, $1,400 per person. So that's really nice.
Yeah.
Hey, look at
got a couple of kids.
Everybody with the kids smiling and shit, like, what up, fool? All of a sudden, we love our kids. They're great. Se portan bien. Nah.
Yeah,
that's what's up, man.
So that's nice. I mean, hopefully that third payment does come through. Also important to know the certain income thresholds. So for the first two payments, if you made, and if you're a single filer, if you made below 75K, you got the full check. So if you made between 75 and 99,000 or so, for the first check, you got part of the check, and then anything above 100K, you were out of luck. For the third check, I think the income threshold changed a little bit. Anything below 75K, you got the full check, and I think it was at 87 where where anything above 87, you're out
Out of luck.
Yeah. So in regards to
For
the
a single?
first payment,
For single?
yeah,
Okay.
for marriage, for married couples, pretty much times 2, but some of the numbers do change. So just just a heads up on that. But and then for the third payment, it's hard to know if they're gonna move that target 75K, if maybe they'll lower it down to 60K. It depends. So they're still kind of ironing that out.
Damn.
Yeah, I saw something about like they wanted like 50K, and then with joint, it would max out at 100. So
And it's pretty interesting right now because we're in the middle of tax season, and then we're also talking about stimulus checks. So how does IRS know who to pay these checks to, right? So it all depends on what they have on file for you for your tax returns. So, for example, stimulus check number 1 came in, March, April 2020?
April.
So at that point, they had for sure your
19, 18.
2018 returns, and then people were in the process of filing their 19, right? So for those who submitted their 2019 returns, they leveraged their 2019 numbers. We're in the middle of tax season, para unos les conviene file their 2020 tax returns ASAP if their income lowered a little bit or if they had a baby or something. Or for
you think
some
it'll
of
catch
us,
up though?
I'm sorry?
Like, let's say you keep filing extensions. If it changes your tax status, won't it catch up to you? Like, if they pay you out and they're like, oh, no.
You don't have to pay it back.
Really?
You don't have to pay it back. So if later in the game they're like, oh, you know what, this person sure enough got this paycheck, from my understanding, from what I'm reading,
it doesn't count as income. They're not seeing that as income.
It's not taxable. So none of these payments are
that's
taxable.
what's
And
up.
if your status changes and you still got a check, you don't have to pay it back, which is a good thing. And then like I was saying, there's other people that should hold off on filing and use their 2019 numbers because it benefits them. So those are some of the things that people should start thinking about. If you're close to that threshold that I just mentioned, 75K, 70K, 85K.
This might be the best. That's what you're gonna title it, bro. This might be the best knowledge for
I've
people.
never heard of that. But yeah, like you said, if you're right at that threshold and if it helps you to file an extension, maybe that's
I mean, you might not even have to file an extension. You just gotta wait till after the check comes in March. If it is coming in March, right after that comes in, boom, sign it. I'm done, bro. Here, file.
And to give some of the viewers some background, I mainly do like business returns at work, but I do some 1040s personal returns.
You're a CPA.
And a CPA.
CPA.
So that's some of the things I'm seeing. The IRS started to accept returns last Friday, February 12th. So we filed a few already, and then there's a couple of situations where I've told a couple people, hey, let's just chill till March, April, see what happens, and then hopefully you get their stimulus check. There's others that should file as soon as possible if they had a baby in 2020 and they want to get the additional credit. It's going to come as part of their refund.
Based on this, as soon as they file, it'll be based on that.
Yeah, exactly. So, I guess key point summary, definitely look at your situation, talk to people, do some research, see if it, benefits you to file right away. If you're over 100K, just file away. If you're, making 30, 40, 50, file away, I'd say. I don't see that 75K threshold going down to 50,
is there any, if you are making 100K, bro, or more, is there any way that you can break that down? Is there any other options for you? No. To not get, be at a higher tax bracket or to be able to qualify for that stimmy? Or nah, you're pretty much, you're done. We'll talk about that off air.
No, that's a good question. In regards to this threshold I keep talking about, it's called your AGI, it's a specific line on your 1040. Some of the things that could benefit you that, gets you down to that number in order to get a check, 401k contributions. The more 401k contributions you put away, the less taxable income you have for that
529.
year.
Like all those tax advantage plans.
HSA, health savings accounts, that's another favorite of mine. That lowers your taxable income as well. Things like that could bring your taxable income down, and then hopefully you get to that level where you get a stimulus check. But again, each person has their own situation, their own scenario, and you kind of need to analyze that a little bit.
For some of the small business owners that are out there and did qualify and did get like EIDL grants and PPP loan, how does that affect them this tax season?
Yeah. To be honest, I don't have, I guess, too many clients or too many people that have had that situation. So I guess I can't really comment on that. But definitely something out there for smaller businesses and different loans that they've received.
Okay. Yeah. I think for the EIDL, they got up to 10 grand forgivable. But I didn't know once it were, for tax season, I don't know if that, but if you don't.
Yeah.
Okay. Anything you got, Noel?
Nah, I mean, I'm reading some of the notes here, bro.
Oh, yeah. Well, I wanted to talk about you did mention for $1,400 for the kids, but then also Biden wants to push out, I think it was like $3,600.
Yeah, child tax credit.
Yep.
Yeah.
But it would be for next year, but somehow you would start receiving payment in July.
Yeah. So what I'm seeing, so currently there's child tax credit $2,000 per kid that you claim in your tax returns up until he or she is 17 years old. They're talking about expanding the child tax credit for next year up to $3,600 per kid who's under 6 years old, I believe. For those that are between 6 and 17, that goes down to, I think, $3,000. So in regards to the child tax credit, most people get it when they file their tax returns. So at the end of the year or in tax season, right? For this $3,600 that we're talking about, this $3,000, I think they would start getting it every month somehow. Not sure how the logistics would work, or I assume they may just deposit it into your account, similar to our stimulus checks. But that's what I'm hearing, and I think the idea behind that is, we're trying to help families along, throughout the year, not just in February, March, April when people are filing their tax returns.
Right, through this pandemic, pretty much.
Yep.
And I forgot what Republican senator, I think he proposed as well. I think he proposed more than 3,600.
Mitt Romney, I
believe. Mitt Romney, yeah. Well, I forgot what was the actual amount.
I read that earlier, actually. I did see it was higher. I forget if it was like 4K or
I wanted to say it was 4K.
4,200, but that's good to see. It seems like there's good movement in Congress to increase that child tax credit and put more money in people's pockets, which...
But they want to get rid of you using your property taxes. And for your...
There's a lot of... I guess,
new policies.
If you get this, we're going to take this away.
We're going to take this from you.
Some, public assistance and things like that.
So it could either balance out or you can get screwed either way as you've been.
Yeah, exactly.
So it kind of seems like the Biden plan would probably benefit everybody a bit more.
Hopefully it passes. Hopefully there's more money in people's pockets, in the coming months or, coming year. So.
Definitely.
I'm taking it all in, bro. There's a lot of information for me, bro. Taking notes, dude. Anything else that you wanted to cover? So we covered stocks, stimmy, taxes as well. Filing your tax, hold off if you made over 100.
yeah.
Or 87 or whatever.
It all depends on the different lines
situations
they draw.
But don't rush. Investigate. Make sure you get that third stimmy.
Right. Exactly.
If you can. You seem excited about the stimmy, bro.
I
don't qualify.
I'm digesting this information. I've never I haven't heard about it yet, so I'm trying to think of where I'm at, try to take advantage.
Math it out.
Yeah.
There's a couple situations that come to mind where people close their bank accounts. So the IRS doesn't have the most recent bank account info. So a esa gente le conviene to file right away, so then their bank account info is out there, and the IRS can deposit that money directly.
Is some of these payments going to depend on how much you have in your accounts?
No.
I'll go close my accounts right now.
But that's just like a quick example of why one person would want to file.
Yeah.
At the same time, if you're waiting to file just to get this third stimulus check, that means that you're gonna hold off on collecting your refund check. So it's cost benefit analysis for your situation.
If you are getting a big refund, you might be like, man, forget that. You know,
I'd rather get my money.
Exactly.
I need it for rent. I need it for mortgage, whatever.
Yeah, so. And people, we probably forgetting a little bit, but people are really suffering through this pandemic. Like, thankfully, I'm working. I know you're working.
In between
jobs. Yeah. But you know what I mean? Like, there are people that have been without work, for a long period of time. So I'm sure they can't wait to file, to get that money. They can't wait on the government assistance, that we're getting. But prayers out to them for sure, man.
Since you have filed for a few other people, clients or whatever, what's the actual? Because before it was like 2 weeks and you would get your refund.
Yeah.
How's that going right now? Because of all the mayhem that's
Yeah, it's a good question. So what I'm telling people is, if we filed, the last couple of days or this past weekend, I'm telling them, wait. Don't be surprised if you don't get anything until March. Typically, it's usually like 10 days to 2 weeks if you file early in the season, but. Not nowadays, I think.
But if you do like a direct deposit, you can definitely cut some of that.
Direct, yeah. So e-filing is the best way to file. If you literally print your return and mail it out, expect IRS to not process that for weeks because they're behind. So definitely try to e-file, direct deposit. Always double check, triple check that your routing and bank account info is correct on your return, because dealing with IRS and calling them is a complete headache, and trying to fix those kind of issues is I don't recommend it. And then in regards to your refund check, I'd say if I were to file today, I would say between 3 weeks to 4 weeks, depending on everything that's going on. So that's kind of what I'm seeing or what I'm hearing, but
okay,
that's some feedback.
Did you already file?
No, not yet.
Oh, okay.
Did you?
Hell no. I'm not after this information, sir. We're gonna hold off. We might have to hold off and chill.
Yes, sir.
And just wait it out a little bit. Ain't no rush.
Yeah.
No rush, man. Did you want to bounce back to any stocks? Any stock questions?
Oh, no, not a stocks, but is there any new write-offs that we should know about? That
yep.
Yeah.
One thing that one of them that comes up is depending on your situation, and I don't want to get too complicated here, but either you take the standard deduction, which I see as an automatic deduction depending on your filing status, if you're single or married filing jointly, or if you take the itemized deduction. Take the one that benefits you the most, the one that's higher. For example, for single, standard deduction is $12,400. Itemized deductions, it's a bucket of things. Think property taxes, state taxes that you pay, interest, mortgage interest, among a few other items, including like donations and medical expenses if you do qualify. Again, it gets
probably going to need to hire somebody that knows a little more than...
It gets complicated.
But do you think like you'll be able to get all those deductions and get all that advantages if you use like TurboTax?
Yeah, so I use TurboTax. I think it's pretty useful program. At the same time, I have some obviously background from being a CPA, so I know how to where to go to in the program and kind of explain it to people. But going back to the standard deduction, itemized deduction thing, if you do a standard deduction this year, you get the opportunity to deduct up to $300 in cash. If you donated to school or church or whatever. Oftentimes, if you didn't, that donation could only count if you itemized. And oftentimes nowadays people don't itemize because of the past tax reform, law changes a couple years ago. The standard deduction increased for people, meaning most people are just taking the standard deduction. So hopefully that makes sense. I don't want to get too complicated, but long story short, there's a deduction out there for cash charitables of up to $300 that people should look to take advantage of it, if whether they itemize or do the standard deduction. So,
bet.
Cool. As far as stocks or whatever, I think I'm all.
You're all wrapped up?
Yeah, I mean for taxes, I don't know if you got anything for as far as taxes, stocks, or anything that you guys want to add that maybe we possibly forgot.
For sure. Because I know, I feel like we talked about a lot of it, but I mean, I'm sure we missed some information. If you guys have anything, for sure, let it out.
I guess just with the stock trading, I think there's just different ways of looking at it. If you're trying to invest in the long term, there's tax advantages to that, and just less risk and less headache if you're a gambler, and you're looking for some double digit returns. You can do some day trading, and you can make some money, but you can also, like I said, it's gambling, so it's high risk, and you just have to you got to have some type of edge. Most day traders lose money, so everybody thinks they're smarter than the system. No, the system is smarter than you, and the system, the market can be wrong longer than you can be solvent. So but I'm more involved with I have my Fidelity, I got my 401ks, my IRAs, and I don't touch any of that money, but I do have my Robinhood accounts and Tasty Trade, and I get in there a few times a day, a few times a week, and it's it feels good. You open the app and you're like up 4%, 5%, or if you hit a if you have a few different companies and one of them just kind of exploded, and you get some double digit returns, and it feels good. So there's money to be made, but you just gotta understand that there's risk. There's risk behind it.
For sure. And I knew I had a question with the stocks, man. What's up with the weed stocks? Dispensaries and all that, being, popping up.
The marijuana
legal in certain areas.
Yeah.
And
so, recently, you have, marijuana was legalized, so everybody thinks, the industry is going to take off. A lot of the stocks have been mostly from Canada, from companies from Canada. But you got some American companies that that are starting to come on the stock market and will be. You just have to be careful, because a few years ago I started investing in them, and again I'm more of a swing trader, so I'm in and out. But Wall Street definitely handed investors their butt back to them. And it's an industry that's up and coming, but there's risk to it. You get all these new companies that are trying to make money, and then trying to increase the price of the share, and they'll do whatever it takes to increase the price of that share, because the CEO, he's got a lot of the CEOs get paid depending on how the stock price is doing. Their benefit package is tied to how the stock price is doing, and there's restrictions like, hey, if the stock price goes up this much, you get this amount of stock, but you can't sell it for X amount of years. So there's.
So is this one that you should probably, if you are looking into that, is this something you should probably focus on, an ETF, one that's already more stable?
There's a couple. Again, you can go after certain companies, or you can go after ETFs that relate to marijuana, or let's say airline industry right now, or cruise industry, or travel industry.
Whatever,
yeah. But I mean, like I said, it all depends on how much risk and how much exposure you're trying to get. I mean, there's ETFs that do like 3x, like that follow like the S&P, either negative or plus 3x, or follow gold at negative or plus 3x. And basically what that means is, if gold or this stock or this industry goes up X amount, that will it's a multiplier. Like, you have 3 times the exposure, and it comes with 3 times the risk, right? So it's both. But if you're really itching to get into a certain industry, and there's certain ETFs that follow it, there's always a way, man. There's always a way.
Anything you wanted to add, Cesar? Or?
Yeah. Just a couple things going back to stocks and how they connect to taxes. In regards to your losses, you could deduct up to $3,000 in capital losses on your tax returns. So say at the end of the year, with say you sold a bunch of things, you won some, you lost some, total capital loss of say $5,000, you can only take $3,000 of that, and the other $2,000 you're able to roll it forward to the following year.
Oh, okay. So you can still roll it. Oh, that's nice.
Yeah, so it's still yours. It's just you can't just use it all.
How long can you roll it over for?
I think it's the next couple. I think 3 years.
Oh, okay.
3 years. I think it's 3 years.
But if you lose money this year, in the next few years you make money, you may not be able to, or like you said, if there's a
say you have a capital gain next year, then your capital gain of $10,000 minus the $2,000 that you lost last year, it definitely helps you. So then that brings down your taxable income.
Yeah.
So yeah, it's a quick note on that. And then in regards to those people that find themselves paying at the end of the year, my recommendation is to adjust your W-4. So you might recall when you start a new job, you have to fill out this form, right? In regards to your tax withholding, you could make updates to that form throughout the year, give it to your employer, and then they'll adjust your paycheck.
So you're kind of like paying more to the government,
correct,
from every check.
So
right?
in this situation, if you find yourself at the end of the year and you have to pay $5,000 or something, you're like, I'm not cool with that. I'd rather pay throughout the year. Well, they'll adjust your withholding, and obviously your week-to-week check, or whenever you get paid, it's going to be a little less. But at the end
you
of the
decide what that percentage is, right?
The withholding?
Yeah.
Yeah. So a new W form was released recently, I think within the past year. I personally find that a little bit more confusing, but I do recommend going to the IRS website and you pretty much plug in your info, like pretty much pull up your latest pay stub, push in the info that you see in your pay stub, and then spits out what your withholding should be and what you should fill out on the form.
Oh, okay, cool. That's helpful.
That's hopefully that helps people. Hopefully most people are getting refunds. They don't have to worry about that. Their withholding is enough, but that's a quick tip on that. I guess on the other side of the spectrum, if your refunds are huge, 10K, 15K for some reason, make that money work for you throughout the year. So maybe adjust your withholding and have them withhold less. So I think that's a quick tip.
Put in the stock market.
I mean, there's two ways of looking at it. You can either, let the government, adjust, your withholdings, and that way you don't have to pay very much at the end of the year. But if you're really good at, working that money, you can adjust it so they don't take any money. You may have to pay, but you may be better at working that money and making that money grow. And then you're still gonna have to pay the government, but
you definitely gonna pay them.
I always tell people, if your refunds are between $1,000, $2,000, you're playing the game right. You're getting a refund, so you don't have to pay at the end of the year, but at the same time you're getting most of the money you deserve throughout the year. If you're getting a large refund or you have to pay a lot of money, then you have to make some adjustments.
Something's not right
to your situation. And that's my opinion. There's others that love getting that fat refund, and that's their way to save money.
Yeah.
If that works for you, that's cool, but you're pretty much giving the government a interest-free loan. So, in my opinion.
True. Very true. I never thought about it in that way, where, you're giving them that money to do whatever they want with it, But right. I never had thought about it like that. But like you said, man, I'm in that situation where it's like, yeah, $2,000, max 3 sometimes, if you get lucky. But yeah.
Cool. I think with this we'll wrap it up. I think we answered a decent amount of questions. Thank you guys for coming on, bro, and helping us out with these topics,
For sure.
Thank you for the invitation, guys.
Yeah,
appreciate
thank
it.
you.
Anything you want to add, Noe?
Hey, just to really appreciate you guys, man. Thanks for the good info. It's Compas Unfiltered, bro.
That's it.
Oh,
we out.
It's a wrap.
Peace. Deuces.
Peace.